Start. Myself, CA Vishnupriya V. Prabhu. I'm a faculty for CA Inter Financial Management. I qualified 2 years back and I have worked for 1 year and then I left my job and then right now I'm practicing and I'm a faculty for CA Inter Financial Management and Advanced Accounting. So, yeah, we'll start with our descriptive questions. So, if you ask my opinion, it was a good RTP except for question number 1. Why except for question number 1? I won't say it was very difficult, but it needed a bit more conceptual knowledge and also it was a bit lengthy. So that's about it. So let's start with question number 4. Shall we read the question? My chat box is on, so you can always type, okay? Yes, so we'll start. Jamunapati Limited has furnished the following ratios and information relating to the year ended 31st March 2024. They have given few data. Sales 70 lakh, return on net worth 25%, income tax 30%, share capital to reserves 7:3, current ratio 2, net profit to sales 7%, inventory turnover 10, cost of goods sold 24 lakh, interest on 15% debentures 1 lakh 5,000, receivables 3 lakh and payables 3 lakh. See, one more thing. For FM, when you are reading the question, read the question with full mind. Because when you go to exactly what the question is asking, you should not actually go to the question and read once again. So when you are reading it for the first time, make sure that you are reading it properly. Okay, so now let's go what they have asked. Firstly, they have asked to calculate the operating expense for the year ended 31st March 2024. And secondly, they have asked us to prepare a balance sheet. And good thing is they have already given us the balance sheet format. So we'll start with part A. Calculation of operating expense. I hope all of you know the format of income statement, right? How is it going? Sales. First, let's complete the format and then we'll come to filling the figures. You guys can actually do with me, okay? ഞാൻ ചെയ്യുമ്പോൾ തന്നെ നിങ്ങൾക്ക് എൻ്റെ ഒപ്പം തന്നെ കൂടെ ചെയ്ത് പോവാ. I hope everybody has a calculator also with you. So whenever I am doing, you also can do with me. Yes, okay ma'am, yes. So sales less cost of goods sold. What do we get here? We get the gross profit, right? From this, if we reduce our operating expense, we get our EBIT. Correct alle? Sales minus cost of goods sold gives you gross profit. And from gross profit, if you reduce your operating expense, you are getting EBIT. And then EBIT minus interest, EBT, minus tax, EAT. So first step is to write the format. And then first fill out whatever is given in the question. We are going to fill all those figures. Sales. Question is തന്നിട്ടുണ്ടോ? Yes, sales is given. 70 lakh. In bracket, write it as given. Cost of goods sold. Is it given in the question? Yes, 24 lakh. So you can find the gross profit. You will get it as 46 lakh. Operating expense. Is it given in the question? No, that is what we are going to find out. So let's keep it there. Then coming into EBIT, if you have to find EBIT, we need operating expense. So that is not possible. So coming to the next thing, interest. Is it given in the question? Yes, 1 lakh 5,000. Without EBIT, we can't find EBT. So let it be there. Tax, that also we can't find. And then tell me, do we have an option to find earnings after tax? Yes, they have given us the net profit to sales. So for this, we are going to write our working note. Earnings after tax or net profit. How will you find out? Net profit by sales is given as, into 100 is given as 7%. So net profit is equal to 7% of 70 lakh, correct? So you'll get it as 4 lakh 90,000. Clear? Now, how can we proceed with this? See, this is how you actually approach a question. Whatever is given, first fill out those things. And അത് ആദ്യം എഴുതിയതിന് ശേഷം think what you can do forward. അത് കഴിഞ്ഞിട്ട് എന്ത് ചെയ്യാൻ പറ്റും എന്നുള്ളത് ആലോചിക്കാം. From this, see, tax in the percentage is given in the question, right? 30% tax is given. So, tell me, what would be this earnings after tax? We can consider it as 70% of EBT. Correct? Because say if EBT is 100, tax is 30%. So you will get your EAT as 70, right? So this 4,90,000 we can take it as 70% and compute this tax as well as this EBT. Correct? So how will you find out? 4,90,000 divided by 70 into 30. That you will get the tax, and 4,90,000 divided by 70 into 100. Or you can find any one figure and then just balancing figure you can do. So you will get it as 2,10,000 and 7 lakh. Did you get this much? Yes. Clear. So from this, can't we backwork from here? We have our earnings before tax as 7 lakh. We have our interest expense as 1,05,000. So what would be our EBIT? Yes, correct. 8,05,000. So if this EBIT is 8,05,000 and operating expense, sorry, gross profit is 46 lakh, what would be my operating expense? Balancing figure, simple. 37 lakh 95,000. Easy. So what did we do? We actually just took the question. They have asked for operating expense. We wrote our income statement format, and from there we first filled whatever is given in the question, and from there we actually backward few things. Correct? So operating question is being asked, and that is 37 lakh 95,000. Clear? Any doubts? No, ma'am. Okay, fine. Clear. Okay. So let's go to B part of the question. Balance sheet as on 31st March 2024. See, in this question, they have directly given you the balance sheet format. So no need to overthink. You can just copy that. See, I am using shortcuts, but you have to write it in full, okay? Please copy the format given in the question. Yes. So same process you have to follow. First, fill whatever is given in the question. What is given in the question? Payable is given in the question as 3 lakh. Correct? Receivables is given in the question. 3 lakh. Anything else? Anything else given in the question directly? No, ma'am. Yes. So, after that, what can we find out? Please tell me what can we find out first. See, there is, and one more thing I'll tell you, for these kind of question, there is no specific format or there is no rule like you have to do this first, do the second, nothing like that. Yes, majority of you said debentures, so that is right. So that's actually how you read it. Like they have already given us like interest on 15% debentures is 1,05,000, which means we have debentures of say X. 15% of X is given as 1,05,000. This is the understanding that you should get when you are reading the question. Clear? There is a figure called debentures. 15% of that figure gives you 1,05,000. That is given in the question. So yes, working note number 2. 15% debentures is equal to 1,05,000. Sorry, 15% of debentures interest. So debentures would be 1,05,000 divided by 15%. Correct? You will get it as 7 lakh. Yes, correct. 7 lakh. In balance sheet, in this format is okay or not? Yes, this format is okay. Like if you check all the textbook questions also, they have used this format only. So this format is fine. You can use this format. Then what can we find out next? What hint have they given in the question other than this? Somebody has mentioned inventory. Yes, correct. So for inventory, let's give it as working note number 3. See, writing steps are also important. Okay, like don't do mind calculations or calculator works and just write the final figures. Don't do that. Write the steps. Because what happens is sometimes, see, we don't intentionally make something wrong, but sometimes unintentionally some calculation mistakes can happen. In that case, what comes to our rescue is these steps. So don't miss out on any of steps. Inventory turnover ratio is given as 10. What is the formula for inventory turnover ratio? Cost of goods sold by average inventory. Cost of goods sold is already given in the question. It's given as 24 lakh. Correct. So you will get it as 2,40,000. Correct. See, since there is no information about opening stock, we are assuming opening stock and closing stock is same. So hence we are putting it as 2,40,000. And then next, what can we do? Current ratio, correct. See, current ratio is given. What is the formula for current ratio? Current asset by current liability, correct? So here in current assets, we have got 2 figures. We need to find this figure. Current liability is given. So with that ratio, can't we find this cash? Yes. So that we can give it as working note number 4. Current ratio is equal to current asset by current liability. What are the current assets that's given in the question? They have already given. So we have already found out stock as 2,40,000. They have given 3 lakh as receivables. Cash we don't know. And then there is a current liability of 3 lakh. Current ratio is given as 2. From this, can't we find the cash? Yes. Cash will be equal to 6 lakh. 6 lakh is 3 lakh into 2 minus 5,40,000. Cash is 60,000. Then what hint have they given in the question next? Return on net worth, correct. See, this shows that you have gone through the RTP and see, you itself is giving me the answers. I'm just doing these things for you. Those who did not get this question, Please, if you have any doubts, you can ask me, okay? At any point, you can comment on the chat box. So, working note number 5. See, ഇപ്പോൾ നിങ്ങളിപ്പോൾ ഈ ഒരു പോയിന്റിൽ സ്റ്റക്ക് ആണെന്ന് വിചാരിക്കുക. What can you do next? Just go through the question and find if anything we have not used. If you go through the question at this point, you will understand that we have not used return on net worth. What is the formula? Return by net worth. How much is given return on net worth? 25%. Return we already know. We have found out the return, right? So, how much is our net worth? Yes, correct. 19 lakh 60,000. And they have also said to us like share capital is to reserves and surpluses 7:3. What is actually this net worth? What is net worth? Net worth is basically shareholders fund. Like if we pay off all our assets and if we pay off all our liabilities, whatever is left off, that is known as net worth. So what is the net worth for a company? It is share capital plus reserves and surplus. So this 19,60,000 includes share capital as well as reserves and surplus. They have given us the ratio of share capital is to reserves and surplus. So can't we divide? Share capital is equal to 19,60,000 into 7/10. Reserves and surplus is equal to 19,60,000 into 3/10. Yes, correct. 13,72,000 and 5,88,000. So what is left of? Only fixed asset. How will we find out? Balancing figure. Simple. Yes. So total liability side, you will get 29,60,000. Assets will be equal to liabilities, right? No doubt. So yes, correct. 23,60,000 will be our fixed asset. That will be our balancing figure. Clear? Yes. So let's go to the next question. Cost of capital. Lavanya Limited wishes to raise additional finance of 20 lakh for meeting its investment plan. It has 4,20,000 in the form of retained earnings available for investment purposes. Further details are as follows. Debt equity mix. Cost of debt up to 3,60,000, 8% before tax. Beyond 3,60,000, 12% before tax. EPS 5. Dividend payout 40%. Retained earnings 60%. Rate of return on retained earnings 10%. Current market price 53. Tax rate 30%. See, if they have not given this retained earnings 60%, we will already know, right? Because 1 minus dividend payout is retained earnings, or 1 minus retained earnings is dividend payout. So in case if they have not given in the question also, we should be able to find out, right? But they have already given it, no issues. And then what are we required to find out? You are required to determine the pattern of raising the additional finance. Okay. How we are going to raise the additional finance? Pattern in the sense how much equity, how much debt, that pattern is asked. B part, post-tax average cost of additional debt. Only additional debt cost they have asked for. Then the cost of retained earnings and cost of equity. Okay. And the last step, weighted average after tax cost. We'll do it in a separate paper. Yes. So question is clear for all of you, right? Shall we start? First, I'll draw a rough thing. See, 20 lakh is the amount they need, of which they have clearly said equity and debt ka ratio. How much is given? How much is equity? Yes. Yes, equity is 14 lakh 70 percentage and debt is 6 lakh 30 percentage. And in this equity, what have they given to us? Retained earnings is given to us, right? How much is retained earnings? Yes, 4 lakh 20,000 is the retained earnings. Our other equity will be 9 lakh 80,000. Similarly, in 6 lakh, we have to divide. Like, if you ask me why, because they have clearly mentioned in the question that cost of debt up to 3 lakh 60,000 is 8 percentage and beyond 3 lakh 60,000 is 12 percentage. So 6 lakh in 3 lakh 60 പോയി കഴിഞ്ഞാൽ ബാക്കി 2 lakh 40,000 in the cost എത്രയാണ്? 12 percentage is the cost for remaining 2 lakh 40,000. See, this is a figure where I roughly drawed. So this is the first question they have asked. Like, what is the pattern of raising debt? See, what you have to do is the same thing you have to present it in a tabular form. I have done it in a chart form. You have to present it in a tabular form. Clear? So this was the first question. Pattern of raising additional finance. What was the next question? KD is what they have asked of additional debt. Okay. So what is the formula for KD? What is the formula for KD? Yes, correct. I into 1 minus T. But in this question, what we have to note, I into 1 minus T by NP, correct? Yes. So NP usually we consider it as 100. Hence, we actually short it and say like I into 1 minus T. So shall we find out? We'll have 2 KD, right? Up to 3 lakh 60,000, our KD will be different. And for the remaining 2 lakh 40,000, the KD will be different. So 8 into 1 minus 30 percentage. You will get it as 5.6. Correct? But since they have asked for what is the cost of additional debt, we have to tell it in total. This is for up to 3 lakh 60,000, this is the cost. And for the remaining 2 lakh 40,000, 8.4 is the cost. How will we find the weighted average? Simple, right? How will we find out? 5.6 into this cost is for 3 lakh 60,000 rupees, right? How much is the total that I am raising? 3 lakh 60 plus 2 lakh 40,000 plus 8.4 into 2 lakh 40 by same 3 lakh 60,000 plus what have we done here? We have just taken the weighted average. അതായത് 3 lakh 60,000 5.6 ആണ്. 2 lakh 40,000 ഡെറ്റിന് 8.4 percentage ആണ്. So we have just taken the weighted average cost. How much will it come? What is this 20,160? Yes, correct answer is 6.72 percentage. So this is the cost of additional debt. Simple, right? What have we done? We have used the KD ka formula. I into 1 minus T. We have found the cost of debt for up to 3,60,000 and beyond 3,60,000. And then what have we done? We have just taken the weighted average cost of debt. Clear? So that is about B part. And in C part, what have they asked? KE and KR. Cost of equity and cost of retained earnings. What is the cost of equity ka formula? Yes, if you have a different way of calculating average cost of debt, it's fine. No issues. Like you should get the same answer. Yes. See, here there might be a doubt. For K, we have multiple methods, right? So one method is normal earnings method. Then we have dividend method. Then we have dividend growth model. Then we have earnings growth model. And then we have CAPM method. We don't have any doubt that this is going to be CAPM. We have no doubt, right? Because they have not given us risk-free return. They have not given us beta. Nothing is given in the question. So we understood that we have to use dividend model. And then how can we come to a conclusion that we have to use growth model? Because in the question, they have given us retention ratio also. They have given us rate of return also. See, this is an important thing which some students miss out in the exam. So that should not happen. In the question, they have clearly given us rate of return and retention ratio. Why should they give us this? How do we find out growth? Growth is equal to retention ratio into rate of return, correct? So to find the growth only, they have actually given retention ratio and rate of return on the question. Yes, correct. Growth rate. So which model we'll have to use? Dividend growth model. What is the formula for dividend growth model? D1 by P0 plus G. They have given all the details in the question. They have given us D. We can find G from here. They have given us price also. So shall we solve? How do we find dividend? They have given EPS as 5. Dividend payout is 40%. So we got our dividend. But this dividend is D0, current year dividend, right? But in the formula, we have to use D1, next year's dividend. So plus growth rate. So let's find out growth rate. What is the retention ratio given in the question? 60%. What is the rate of return? 10, right? So 6% is our growth rate. So coming here, plus 6% by P0. Current market price is given in the question. What is P0? What is the price that I am going to get in the market right now? P0, price of the shares right now. How to find whether it's D1 or D0? Like in the formula, we'll have to use D1. What have they given in the question? They have given us EPS in the question. EPS of current year. They have given all the figures for current year only. They won't be able to give us the EPS for next year, right? They have given us in the question EPS of the current year. So current year's EPS into current year's dividend payout ratio, we'll be able to only find out current year's dividend. So that will be D0. Hence for the formula, we'll have to make it to D1. We can't use D0 in the formula. We have to take D1. So how will we find D1 from D0? D0 into 1 plus G. D0 into 1 plus G. Aditya, is it clear? Yes. So can you solve this? Yes, 10%. So this is our cost of equity. Now tell me what will be our cost of retained earnings? What will be our cost of retained earnings? Yes, K is equal to KR because you can't always tell K is equal to KR. K is equal to KR because of this cost, there is no flotation cost or there is no personal kind of income tax or any information like that given. So we can assume that K is equal to KR. So KR also will be equal to 10 percentage, since there is no other flotation cost or such kind of adjustments given in the question. And then coming into the last part. So this is clear, right? So let's go to the last part. Weighted average cost of capital. Source, values or amounts, weight, cost, weighted average cost. Yes. So we can write it together, right? Because K is equal to KR. So we can club it and write it 14 lakh. Sorry, 10 percentage. Here weight is 0.7 because it's already given in the question, right? Debt also we have found out the weighted average cost of debt. So we need not split and write. We can write it together. So please find out the weighted average cost of capital. Yes. 9.016. Those who have not completed, please complete it, okay? Yes, done, ma'am. Yes. So we'll go to the next question. ABC Limited is planning to raise 50 lakh for a major expansion project. The firm is evaluating three financing options. Okay, first option is equity financing only. Issuing new equity shares at rupees 10 each. Issue price 10. Flotation cost 0.5. Existing equity shares 10 lakh. Market price is given 20. Okay. Second option, first one was only equity. Second option is debt financing only. Borrow 50 lakh at 12% interest. Flotation cost is given 2% of the face value. Then they have given something. The lender imposes a debt covenant limiting the interest coverage ratio to a minimum of 2.5. Covenant just means an agreement. That's all. Nothing else. Covenant means an agreement. That is, the lender has said that the interest coverage ratio should only be 2.5. Clear? So there is an agreement. Covenant means agreement, nothing else. That is all about the second option. And what is the third option? Equity plus debt. Raise 25 lakh through equity, flotation cost 0.5 paisa at rupees 10 issue price, and 25 lakh through debt at 12% interest, flotation cost 2%. Additional information is given. EBIT is 15 lakh, tax is 30%, existing shares 10 lakh, that they have given here also. Existing shares is 10 lakh. Risk-free rate is 6%, market return is 14%, equity beta is 1.2. When you see this itself, you should understand that you can find out KE from this, right? Through CAPM method. Now, let's see what they have asked us to find out. Calculate the net proceeds from each financing method after flotation cost. They have asked us to find net proceeds, nothing else. And determine the number of new shares issued under option 1 and option 3. Second one, for the debt options, check if the interest coverage ratio complies with the agreement minimum 2.5. Then they have asked us to find out EPS. Then they have asked us to find out weighted average cost of capital under each option, considering the impact of flotation cost on capital raised. Advise which financing option is best from a EPS and weighted average cost of capital perspective. Is the question clear? What have they said? They are going to raise 50 lakh. Three options are given. All equity, all debt, debt plus equity. They have given the respective flotation cost and all those things. First thing, we'll have to find out the net proceeds under each option. See, this is an easy question, but maybe there is an adjustment which you have not regularly seen in your study material. A small one, but very logical, very simple. Shall we do? This is question number 6, right? Yes. We are going to do the A part. We are going to find out net proceeds under each method. They have asked us to find out net proceeds under each method and also number of new shares. That is also being asked. So shall we find out the net proceeds? Option 1. How will we find the net proceeds? They have given us issue price as 10, flotation cost as 0.5. How much will be our net proceeds? Issue price minus flotation cost. What do you mean by net proceeds? What amount will I get from the issue of equity shares? That is my net proceeds. What amount will I get from the issue of shares? Shares or debentures or whatever. So there's an issue price of 10. What is flotation cost? That's a cost incurred for raising that particular fund. So in this question, they have clearly told us we are issuing the shares for 10 rupees, but there's a cost associated with it. Per share, you will have to pay 0.5 rupees. So what will be our net proceeds? Issue price minus flotation cost, 9.5. Now tell me, how much number of shares should be issued? How much number of shares to be issued? See, how much number? How will we find out? How much amount do we need? We need to raise 50 lakh rupees. Correct? Per share, we will be getting 9.5. So, how many number of shares we are going to raise? If you divide it, you will get it as 5,26,316 shares. Correct? Correct, correct. Good, 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 good. Now, this one is okay, right? This one was easy. Now, let's go to option 3 first and then we'll come to option 2 because option 3 also we have to find number of equity shares. In option 2, we don't have to find the number of equity shares because it's completely raised through debt. So, let's go to option 3. Again, first question is net proceeds. What is the net proceeds of equity? Same, 9.5. Now, the important thing is about debt. In that question, we have to note a thing about debt. What have they given? We are borrowing, raising 25 lakh at 12% interest. But there's a flotation cost of 2%. So, tell me, when you read the question, did you have any idea on how to compute this? Equity, it's clear, right? This is fine. Now, coming into debt, they have to raise 25 lakh. But there is a 2% flotation cost. First thing which you have to understand is, we anyway need 25 lakh rupees. See, if you take it like 25 lakh minus 2%, you will get it as 24 lakh 50,000 will be our net proceeds. Is it okay? No, because we need total 50 lakh rupees. 25 lakh rupees you are raising through equity under option 3. But 25 lakh rupees you compulsorily need it through debt. So if you take it like 25 lakh I'm issuing and 2% I'm paying flotation cost, is it okay? No, it's not okay. You need 25 lakhs in your hand. So we are going to actually find out how much we have to issue. See, say there's an amount X. After 2%, we should actually get 25 lakh. Correct? There's a borrowing amount. If I reduce the flotation cost of 2% from that, I should get 25 lakh. So we need to find this. We are going to find out this Gross borrowing. How will you find out gross borrowing? See, from this equation itself, you can find out, right? 98% x is equal to 25 lakh. So x means gross borrowings. Gross borrowings will be 25 lakh into by 98 percentage. You will get it like 25 lakh 51,020. And what will be my net proceedings in this case? 25 lakh. Because I am issuing 25 lakh 51,020 rupees debt. And from that 2% flotation cost will be gone. So my net proceeds from debt will be 25 lakh. Clear? Clear? If you want, you can try. Flotation cost, you will get it 51,020. So your net proceeds will be 25 lakh. Got it? Yes. So can you please find out option number 2? Can you please do option number 2? Option number 2, it's completely debt only. Net proceeds, no doubt. 50 lakh will be our net proceeds. Tell me what will be the gross debt or gross borrowing. Same only. Flotation cost is 2%. Yes. Correct. 50 lakh by 98 percentage. So this will be our gross debt, but our net proceeds will be anyway 50 lakh. Correct. So that was the first part of the question. I hope it's clear right now. Clear. Yes. So what is the second question? They have asked us to confirm if the agreement is met under option 2 and option 3, because in option 2 and 3 only we have debt. So what was the condition? ICR, interest coverage ratio, should be 2.5. Minimum of 2.5. So first let's write the formula for interest coverage ratio. What is the formula for interest coverage ratio? EBIT by interest. Yes. So option number 2, interest coverage ratio will be EBIT is given directly in the question as 15 lakh. How will you find the interest? How will you find the interest? See, here you should not make a mistake of taking 50 lakh. Don't take 50 lakh into 12%. You have to take it as 51 lakh. Sorry. 51 lakh 2040 into 12 percentage. Please find out what is the interest coverage ratio. Is this adjustment clear? Because we have to pay interest on the gross borrowings, not on the net proceeds. Tell me how much you got the interest coverage ratio. Yes, 2.45. And option number 3, also please find out the interest coverage ratio. Same, EBIT is not going to change because that's already given in the question. And then you have to find out interest. Interest would be 25 lakh 51,020 into 12%. So tell me which option is actually meeting the agreement limit. Correct. Only option 3 is meeting the interest coverage ratio limit of 2.5. This is not actually meeting. So you have to write that comment because that is being asked in the question. Clear? If this much part is clear, you can comfortably do the third part and fourth part. Very simple. You just have to find out the EPS. That is the third part. And last part is to find out the weighted average cost of capital, right? Yes. So first let's do the EPS. Calculation of EPS under three alternatives. Option 1, option 2, and option 3. So from where we can start? We can start from EBIT because that is given in the question. EBIT is 15 lakh. Near option 1, you can even mention if it is equity or debt, so there is no confusion. Yes. Less interest, you get EBT. Less tax, you get EAT. Divided by number of shares, you get EPS. See, whenever possible, do write the format first. Grossing of interest on debt is new concept. No, it's not a new concept actually. Like, see, when we are actually, they have said in the question clearly that they need 50 lakh rupees as investment. So under option 2, we have to get 50 lakh anyway. So if we are actually issuing only 50 lakh rupees worth of debt, after flotation cost, we will be getting an amount which is less than 50 lakh, which is not actually enough. So from the question, we have to understand that we have to find the gross borrowings. I think in some previous year questions also this kind of question has come where you have to find out the grossing of interest. That's what I said. In textbook, I don't think we have a question which explains this concept of grossing of interest on debt. Clear? I hope you understood why we did that, right? If you get a question in exam, you should be able to do. Clear, ma'am. Yes. So please do this. In this, we don't have interest because it's an all equity option. This interest we have already found out when we were calculating interest coverage ratio. So you can use that itself. Need not find again. Please find out and tell me the final EPS. Simple. You can do it by yourself. Tax percentage is given. Everything is given. Number of shares also we have actually found out. Yes, in number of shares, there is something that is to be noted. What is that thing? We have actually found out like 5,26,316 will be the number of shares to be issued under option 1. But please note in the question they have already said that there is an existing equity shares of 10 lakh. So you will have to actually take that also into consideration when you are actually finding the EPS. That is the only thing that you will have to note in C part of the question. Rest everything is simple. You have to take that 10 lakh. 5,26,316 is the new equity shares. 10 lakh is the existing number of equity shares. So when we are actually finding the EPS, we have to take the existing equity shares also, new equity shares also. Clear? So don't get it wrong over here. That is the only thing that can go wrong in this question. Rest everything is simple. Once you get the EPS, please tell me. We are getting the answers 0.66688, correct? Point 621. Yes, yes, yes. To 25 lakh by 9.5 ആണ് number of shares. Option number 3. How to calculate interest amount of option number 3. See, here we have actually found out the interest amount of option number 3, right? 25 lakh 51,020 into 12 percentage. Disha, is it clear? Like in C part of the, I mean in B part of the question, we have already found out the interest amount of option number 3. 25 lakh 51,020 into 12 percentage. Yes, okay. Yes, 0.662. Correct. Clear? Done? So, we have one more part in this question, but just going through again. Net proceeds for equity shares, it was fairly simple. For borrowings, what have we done? We anyway need the amount that is already stated in the question. So we have actually taken the gross borrowings. And the important thing that you have to notice when you are actually doing the second part, when you are taking the interest cost, please make sure that you are calculating the interest on gross borrowings, not on net proceeds. You have to calculate on gross borrowings. And also coming into C part, what is important is number of shares. Don't miss out on the 10 lakh equity shares already given in the question. In A part, we have already found out the new number of equity shares. But we have also have to add the existing number of equity shares. Clear? So let's go to the last part. What have they asked in the last part? Under each option, compute the WACC under each option. So we can compute, right? So first let's find out. Option 1. Option 1. It was an equity only option. So we need to only find out KE. How will we find out KE? When reading the question itself, we had already discussed that they have given us the details to find out KE under CAPM method. Right? What is the formula? RF plus beta RM minus RF. What is RF? Risk-free return plus beta is given in the question. Market return is given. Risk-free return is given. So from this, we'll get the K. Simple, right? All the details are directly given in the question. See here, the risk-free rate is given, market return is given, equity beta is also given. So, option 1, what is the WAC? Same as KE, right? Because there is no other option of finance. So, 15.6 will be the WAC under option 1. And what about option number 2? It's debt only. Again, same thing. We have already done in the previous question. What is the formula for KD? I into 1 minus T. So KD you get it as 8.4. So under option 2, KD will be same as WAC, right? Because there is only debt option. Now, coming under option number 3. Here you will actually have to do weighted average cost of capital. How will you do weighted average cost of capital? You see, KE and KD is not going to change, right? KE will be this under option 3. KD will also be this itself under option 3. Correct. Because about KE, they have given it as a general information. And about KD under option 3 also, we are actually raising 12% debentures. So, we just need to find out the weighted average cost of capital. Weight of equity into KE plus weight of debt into KD. Either you can draw that tabular format or you can do it as a formula. Whichever method is comfortable, you can follow that. Right now, I am doing this as a formula, not drawing the table. Point 96. Once completed, please reply done or clear. Clear. I'm happy that majority of you are staying active and doing with me. And I hope everybody is sitting straight with your book, calculator and things and doing all questions along with me. So, shall we go to the next question? Yes. So, let's go to the next question. X Limited and Y Limited are two mid-sized companies operating in the same competitive industry. Okay. Both companies have recently undergone a financial performance review to assess their operational efficiency, cost structure, and overall financial risk. Okay. You, as a financial analyst, have been provided with selective financial indicators and are required to draw insights and comparisons based on leverage analysis and income statement reconstruction. The management of X Limited has disclosed that company is currently operating with a MOS of 0.1667. Okay. In contrast, Y Limited has a MOS that is twice as high as that of X Limited. So what will be the MOS of Y Limited? Twice as high as MOS of X Limited. So it will be point. Yes. Both companies maintain a financial leverage of 3. Okay. 3 is the financial leverage under for both the companies. Their variable cost ratios are 60% and 50%. Okay. In terms of financing cost, X Limited incurs an annual interest expense of 30,000. Okay. X Limited incurs an interest expense of 30,000. So what are the information given? X Limited, Y Limited. MOS is given. 0.1667 and 0.334. So, yeah. And then coming into variable cost ratio, 60%, 50%. And now they have given us the interest cost. What is it? 30,000. And Y Limited, however, incurs an interest cost that is 300% higher than X Limited. Tell me what will be the interest cost of company Y? 300% higher than X Limited. That is important. You have to actually read the question very carefully. 30,000 is the interest expense of X Limited. Correct. 1,20,000. See, if you have got 1,20,000, well and good. But sometimes what happens is students take it as 90,000 because 300 times. No, 300 times higher than X Limited. That means X Limited already has an interest expense and interest expense of Y Limited is 300% higher. So, you have to actually take 30,000 plus 300 percentage of existing. Did everyone get this as 1,20,000? Any confusions? Here they have just mentioned it as twice as high. So we just multiplied it with 2. But in case of interest, they have mentioned it as 300% higher than X Limited. അതായത് എത്രയാണോ എക്സ് ലിമിറ്റഡിനുള്ള അതിനേക്കാളും 300% കൂടുതലാണ് എന്നാണ് അവർ മെൻഷൻ ചെയ്തേക്കുന്നത്. ക്ലിയർ? See, in this question, everything else is simple. Only thing that can get you wrong is this one. Rest, the whole question is very simple. Yes, clear. And there is a corporate tax rate of 30% which affects their net profitability after interest and tax. You are required to prepare income statements and identify which company is better placed based on leverages. Okay. And someone had asked in between, like, will we upload this in YouTube? Yes, we will. Yes, this is getting recorded. We will definitely upload this in YouTube. At least I'll share you the link if you ask. So, shall we do this question? I'm just copying the information that's already given in the question, okay? They have asked us to prepare the income statement. So, if to find the income statement, we need EBIT and all those figures. So, from this, let's first find out those things and then we'll go to income statement. Yes. See, I'll tell you one thing. If you get a question from leverages and if financial leverage is given in the question and if they have given interest also in the question, you can find EBIT from this. You should have an understanding of that because what is the formula for financial leverage? EBIT by EBT, right? What is EBT? You can write EBT like EBIT minus interest. So you can write it like this also. So in the question, if they have given financial leverage and interest, please understand this is the first step that you can do. So you get a starting point. So shall we do? First step. Calculation of EB8. You need not write the heading. I just wrote it for your understanding. That's all. So I'm doing this together only. I'm doing it in a columnar format. But if you want, you can do it one by one also. That's also fine. No issues. So financial leverage formula is EBIT by EBIT minus interest. 3 is the financial leverage. And for X Limited, the interest is 30,000. For Y Limited, the interest is 1,20,000. So on solving this, you will get 3 EBIT minus 90,000 is equal to EBIT. 2 EBIT is equal to, so you got the EBIT as 45,000 in case of X Limited, and in case of Y Limited, 3 EBIT minus 3,60,000 is equal to EBIT. 2 EBIT is equal to 3,60,000. EBIT is equal to 1,80,000. Correct. 1,80,000, correct. And then let's go back to the question. So we got EBIT. Now we need contribution. Now we need sales. There are a lot of things also needed. So next thing, what is MOS? There is another formula for MOS related to leverage. Yes, 1 by MOS is operating leverage, or MOS is equal to 1 by operating leverage. So operating leverage is equal to 1 by MOS. See, to those people who can't remember the formula, it's completely fine. Right now, study the formula and do. Okay? In case if you are not able to recollect, no issues. Right now, when you are doing, please make sure that you are actually feeding it into your head. Clear? It's very normal for us to forget some things, but it's okay. When you are doing, do it and study. So, we found out the operating leverage. What is the formula for, see, this is how you actually continue. You actually found out the operating leverage. Now you should think, what is the formula for operating leverage? Formula for operating leverage is contribution by EBIT. We have operating leverage, we have EBIT, so we can find the contribution. So the next step is operating leverage is equal to contribution by EBIT. And one more thing, don't get me wrong, my handwriting is not this bad. When I'm writing it in screen, this somehow turns out like this, okay? I hope you are actually able to read what I am writing. Okay. Yes. So, shall we draw the income statement? Is it better now? Change it to red color. Yes, okay. So, let's draw the income statement. X Limited, Y Limited. Particulars. As I always say, first complete the format. Sales minus variable cost gives you contribution minus fixed cost is equal to EBIT. Now actually doing this RTP itself, we have actually done two formats of finding EBIT, right? One method is sales minus variable cost gives you contribution minus fixed cost gives you EBIT. Or sales minus cost of goods sold give you gross profit minus operating expense give you EBIT. Remember that, okay? Minus interest. Yes, yes, correct. So, shall we do? First, let's fill whatever we know. We know the contribution. 2,70,000, 5,40,000. We know EBIT. If you have given numbers for your working note, you can just mention the numbers here. Then interest also we know. So we can compute the EBT. And from that we can definitely compute the tax because it's given us 30%. Now tell me, from this, now only things that are missing is sales is missing, variable cost is missing, fixed cost is missing. Have we got something in the question that we have not used? Is there something in the question that we have not used? See, here they have given us the variable cost ratio as 60,000 and, sorry, 60 percentage and 50 percentage. So, if my variable cost is 60% and 50%, what will be my contribution? Same thing we did earlier also. Same concept. So, contribution will be 40%. So, we'll have to find out what is the 60%, correct? So, you can do it like 2,70,000 divided by 40 into 60. You will get it as 4 lakh 5,000 and 5 lakh 40,000. From this, you can actually find out the sales, right? Balancing figure. You just need to add the two things. This one will be balancing figure and this fixed cost also will be balancing figure. You can even find sales from contribution, okay? Whichever way you want to do, you can do, no issues. Now, there is one more part for the question. They have asked us to comment and they have also asked us to comment based on leverage. So, we have actually got, under this itself we can do operating leverage we know 6 and 3. Financial leverage we know 3, 3. So, what will be the combined leverage? What is the combined leverage formula? One formula is contribution by EBT, but we need not go detail into that. We can do operating leverage into financial leverage. Correct? Yes. So, what does this mean? Having an combined leverage of 18 means the risk is more. Interest coverage ratio also because we have EBIT also, interest also. And we'll get it as 1.5, 1.5. So there is no difference in interest coverage ratio, but the risk of X limited is higher than risk of Y limited. That is what is being asked in this question. Clear? Simple question, right? Yes. So, shall we move to the next question? Yes. In the month of April of current financial year, shares of PQR Limited were sold for 1570 per share. A long-term earnings growth rate of 8%. Already growth rate is given. Paid dividend of 25 per share. Okay. Calculate the rate of return an investor can expect to earn assuming that dividends are expected to grow along with the earnings at 8% per year in perpetuity. What is the meaning? What have they actually asked us to find out? Rate of return an investor can expect. What have they asked us to find out? See, expectation of investors is the cost to the company. When we are learning, yes, correct, K, correct. Cost of, when we are learning cost of capital, it is cost to company and it is the return to investors. So K is actually the expectation of investors. So we have to find out KE in this part. Second part, it is expected that PQR Limited will earn about 10% of retained earnings and shall retain 60% of earnings. In this case, state whether there will be any change in growth rate and cost of equity. Definitely there will be a change in growth rate, right? No doubt. Because what is the formula for G? You already said B into R. Retention ratio into rate of return. So if that is changing, definitely our growth rate will change and definitely our equity will change. Cost of equity will change. Let's find out how to do this question. So we are doing dividend decision ka question. So it's given in the question. First, let's do the first part. Growth is given. Paid dividend, that is given. So that is D0. And sold for 1570 means they have given us the P0. So first part, KE. What is the formula? Same formula we used above. D1 by P0 plus G. 25 into how much is the KE that you got? Correct. 9.7. Now going into second part. Growth rate you can find out. How much is the growth rate? 60% and 10%. So B into R. And then how will you again do? K is equal to D1 by P0 plus G. What is the D0? 25 into 1.06 plus by 1570 plus 0.06. But don't do like this, okay? This is not right. I'll tell you why. There's a high probability that when you try to solve, you would have done it this way. Right? Is there anyone who tried it this way before checking the answer? Yes, ma'am. Yes, ma'am. Yes, ma'am. Yes. See, here they have actually given, they have paid a dividend of 25 per share. Okay. Now, it is expected that PQR Limited will earn 10% on retained earnings and shall retain 60% of earning. So definitely there is a change in growth rate. What ICA has done in this case is they have assumed 10% of rate of return is same in the first case also. So only our retained earnings percentage is changing. Hence, how they have taken it is, we have to actually find out what is the EPS in the previous case. And from there, we will have to find out the dividend as per our new retention ratio. Because ICA has assumed that the rate of return of investor is remaining same and only the retention ratio is changing. So, hence, we'll have to actually first find out the EPS. How will we find out the EPS? We know the dividend is 25. Growth is 8%. And since we have assumed return is 10%, we have to find out our retention ratio. What will be my retention ratio in the first case? Correct. 80% will be my retention ratio. So if my retention ratio is 80 percentage, what will be my dividend payout? 1 minus 0.80, that will be 20 percentage. So if my dividend payout is 20% and I am getting a dividend of 25, what will be my EPS? EPS into dividend payout ratio gives you your dividend, correct? So EPS into 20% is your 25 rupees. So EPS is 25 by 20%, 125 rupees. So 125 is your EPS and 125 is the EPS and dividend is 25 when your dividend payout was 20%. Now what has happened? Our rate of return is remaining the same, but our retention ratio is changing, right? Retention ratio is becoming 60%. If my retention ratio is becoming 60%, what will be my dividend payout ratio? Therefore, now retention ratio is 60%. Therefore, my dividend payout ratio will be 40%. So, what will be my new dividend? 125 into 40 percentage. 50 rupees will be my new dividend. So, now we can find out our K. Yes, correct. So, did you get the KE now? And one more thing. Again, there will be a confusion. Shouldn't we calculate growth? Shouldn't we take this 50 as D0 and calculate growth? No, because here they have given paid. But here they have said it is expected that. So they are talking about the future. So they are already telling us like in future we are going to have a 10% return and 60% retention ratio. Which means they are already talking about future. Clear? That is why ICA has not again considered the growth rate. Clear? Firm has a total sales of 200 lakh. Whenever you get such kind of question, try to draw a chart. So you don't have to again repeatedly read the question. Of which 80% is on credit. 80% is on credit means 160 lakh is on credit. Remaining 20% is on cash. It is offering credit terms of 240 net 120. That is total credit period is 120. If you are paying it within 40 days, you are going to get a discount of 2%. Of the total, 50% customers avail discount. See, who will avail the discount? Only out of this 160 lakh people will avail the discount. So out of this 160 lakh, 50% people have paid us within 40 days. And 50% of people have paid us within 120 days. 80 lakh, 80 lakh. Now, past experience indicate that bad debt losses are around 1.5% of credit sales. Okay. The firm spends around 2,40,000 per annum to administer its credit sales. That is, right now it has a cost of 2,40,000 per annum. These are avoidable as a factor is prepared to buy the firm's receivable. So this question is about factoring. Okay. He will charge 2% commission. He will pay advance against a receivable to firm at an interest rate of 18% after withholding 10% as reserve. Okay. First question. Effective cost of factoring. 360 days you can consider as the year. If second question. If bank finance for working capital is available at 12% interest, advice, should the firm avail factoring service? First, let's complete the A part and then we'll come to P part. Sorry. So, working capital. Shall we do? What have they asked us to find out? Effective cost of factoring. As again, first let's write the format and then we'll fill the data. So, how do you actually find the effective cost of factoring? A part is cost to firm and B part will be savings to firm, right? When you are giving for factoring, there is a cost associated with it. So you have to take that into consideration. And when you are giving for factoring, you actually have some cost savings. So that also needs to be considered. So what is the first cost to the firm? When you are giving for factoring, it's commission. They have given in the question directly. And the next one is interest. So these two are the cost associated with factoring. And what is the savings to the firm? That is also given in the question. There is an annual administration cost. If we had not given this for factoring, there is an administration cost. That is given in the question. And also there is a savings of bad debt. If we had not given this for factoring, we will have a bad debt loss. But since we have given this for factoring, there is a savings in bad debt. So, shall we do this? So, this is A, this is B. So, net cost to the firm will be A minus B. What about discount? Which discount? See, we are actually talking about the cost of factoring. We are actually not talking about the discount that we have provided to customers. We are talking about since I have given this for factoring, what is the cost that I have to incur? Discount is something that is between the company and the customer. So that doesn't come in here. Here what are we discussing about? I am giving this for factoring. So what is the cost associated with factoring? Clear? So let's find out. Now let's do the working note. Total sales. How much was the total sales? 200 lakhs. Out of which credit sales was 160 lakh. Correct? And in that, sales with 40 days credit period was 80 lakh and sales with 120 days credit period, that is also 80 lakh. So what is the average credit period? Half of my customer uses 40-day credit period. Half of my customer uses 120 days credit period. So how will we find out? 80 lakh by 160. into 40 days plus 80 lakh by 160 into 120 days. Once you solve, you will get it as 80 days. This is my average credit period. Why are we finding the average credit period? To find our average receivables. What will be my average receivables? I totally have a 160 lakh of sales, of which my average credit period is 80. 160 lakh into 80 by 360. You will get it as 35 lakh 55,556. Correct? Now, you got the average receivables. Now, please tell me what would be the factoring commission. It's given as 2%, right? So, 35 lakh 55,556 into 2%. And they have said in question about a reserve of 10%. So that you will have to find out. And then there is also an interest. Here, first you find out this figure, you will get it as 71,111 and this one will be 35556. Now, when you are computing the interest, on what should you actually compute the interest? On what fund you are actually giving to them, on that only you have to compute the interest. For example, total amount that I should give to that, from the point of view of factor, total amount that he should pay is 35 lakh 55,556, of which he is not paying, he is deducting a commission of 71,111. It's not like factor gives us full money and then we'll pay him commission. No. When factor is giving us the amount itself, he will already deduct the commission and then pay us the amount. Clear? So that is to be reduced. Also, he is keeping a reserve. So this is also to be reduced into interest rate is given in the question into our credit period. So you will get it as 1,25,156. Clear? You actually took your total sales. You found out your credit sales and we have to find out our average credit period. Why? Because few creditors have paid us within 40 days. Few creditors has paid us within 120 days. So you will have to first find out the average credit period. Once you find the average credit period, you will get the average receivables. Once you get the average receivables, you have to find out the commission. You have to find out the interest. So first we found out the commission, and while finding the interest, we saw that there's a reserve also. So on what amount should we calculate the interest? What amount the factor is paying to the company, that on that amount we have to actually find out the interest. So what amount will factor pay to the company? Total receivables minus interest cost minus commission minus reserves. This is the amount that factor is going to pay. So on that only we have to compute the interest. Don't get it wrong over here. Clear? Now it's simple, right? Annual administration cost is directly given in the question. Bad debt you can actually find out 1.5%. And here we are actually finding the annual cost to the firm. We have actually found out the commission. What was the commission amount? 71,111. This is actually for one cycle, right? This commission amount is for one cycle. In an year, totally there is 360 days. And this commission is for 80 days. And they have asked me to find out the cost annually. This is annual cost. This is annual cost. So these figures should also be annual cost. Hence, we have to multiply it with 360 divided by 80. Same way, interest also 1,25,156 is for 80. We have to find it for 360. You will get it as 5,63,200. So total will be 1,83,200. Now what is the cost to the firm? 4,03,200. Now, what is the effective cost of factoring? This is the cost I will have to incur if I am giving for factoring divided by what will be the amount that I will be receiving. You have to minus all these things to get what will be the amount that is received. Please compute that amount and tell me. Net payable from the point of view of factor would be 30,03,733, or receivable from the point of view of firm. You will get effective cost of factoring as 13.42. Did you get this? And what is said in the next part? There is a working capital loan from bank which is available at 12% rate. Should they go for factoring? How will you decide? See, if I go for factoring, this is the percentage of cost that I'll have to bear. But presently, if I'm not giving for, why are we actually giving it for factoring? Because we want the money now. We want the amount right now, right? So, if we are actually going for factoring, we are going to incur a cost of 13.42%. But at the same time, we can actually take a loan from the bank for the same amount for just 12%. So which option will the company prefer? Definitely this bank option, right? They'll only have to pay 12% interest. But if I'm taking factoring option, I'll have to pay 13.42%. Clear? Completed all our practical questions. Okay, sure. I hope it's fine for everybody, and whatever we have taken till now, I hope it's clear for everyone. So we'll cover the next question tomorrow. Maybe tomorrow morning we can have a 30-minute session and complete the first question. So how was the session? Did you understand? Yes. So if you have any further doubts also, you can actually WhatsApp me in group. My number is there. So in case you have any, ma'am, can you provide notes for first and second? Thank you so much to all you people for staying till the end, cooperating with me and staying till the end. So see you all tomorrow.